I'm starting this week ahead with my new book, Markets and Momentum, How Profiling Gives Traders an Advantage. The majority of short-term traders in particular, are momentum buyers or momentum sellers if the mood is down. But currently the market's been up, so there's a tendency to be strong momentum buyers. When you're looking only at momentum, you are looking at just one dimension of the market. When you profile the markets, you give the advantage of looking at the context behind the market or looking at the market in the 3D formation. Let's take a look at the first graphic. When you see this graphic, I've labeled A, B, and C. A, B, and C indicate to me that the momentum traders were long laggard buyers. The characteristic is that they tend to buy on exacting levels. So you can see the A, B, and C, the buying takes place at almost exacting trend lines. That is not the behavioral characteristic of stronger, bigger money. That is a characteristic that identifies to me that the traders are the weaker hands, laggard buyers. Now, these laggard buyers are being met by innovative, longer-term sellers. Innovative, longer-term sellers, they do not desire to destroy the market. What they would rather do is they would rather sell on rallies, not be over-aggressive. They don't want to alert the market to the fact that there is selling going on. They're very quiet about what they do. So as they do this, and those shorter time frames get longer and longer, you're setting up for a potential sharp liquidation break. Now, right now, we are not far off the high, but the fact that we put in a new all-time high this past week adds additional risk to the downside. And the reason for that is there's a possibility that the market has shown completion of the existing auction. If that is true, by that new all-time high with no upside follow-through signals completion, it could start to bring more serious liquidation. Now, liquidation by itself can just bring the market into short-term balance. The question is, do you get liquidation accompanied by new money selling? If that is the case, the break would take down below the 575 to 580 level that you see the red line on the bottom. The other factor that's going on here is uncertainty. Markets hate uncertainty. Now, there's two aspects to this. Uncertainty is bad for businesses. The larger businesses that are faced with, really uncertain market or economic environments tend to simply say, let's wait and see before we go forward with our plans. This can bring, lower economic activity to the market, which can pressure the short-term aspects of the market. Short-term traders, as well as any trader, also hate uncertainty. When you get uncertainty, that tends to bring liquidation into the market. That liquidation can be fairly natural because what happens is the buying dries up. So as some natural selling comes in, there's no one to take up the slack. Now, as I say, so far, this is not major. And you have to consider that this is a Friday expiration. When you have an options expiration on Friday, and when the majority of the market has been to the upside, there is a strong tendency to have naked option writers in the market. These are people that have written the options, anticipating that the markets go higher. The last thing that a naked option writer wants to see is a market that starts to pull back. When the market pulls back, particularly on a Friday, these traders are caught in a long position and they have to liquidate in order to protect their positions, and that can accentuate the breaks to the downside. Now, as we come into next week, the first thing the market needs to do is to come into short-term balance. There's no indication that we had that on the close today. The upside resistance would be the trend line that we broke below today. What we have to see is, do we get downside follow through next week? And if we start to build lower value next week, then the ultimate break could be down to that 575, 580 level. But the first focus using the SPY will be focused right on that 600 level. So if there's any downside, you'll start to see price acceptance down below the 600 level. You get any serious acceptance below that level, it could accentuate the break to the downside. But for right now, the market needs to find short-term balance. And as we come into next week, my initial focus will be on 600 based on the SPY. Thank you. Have a great week.